Good afternoon everyone, this is Connor from Zenfinex and welcome to our monthly forecast videos. Today I'm going to be covering a crude oil forecast by just running over the recent supply and demand news events which has really set the tone for where this market is heading in the next month. I'm then going to head on to the chart and have a look at the technicals. Crude oil prices have been trending higher since early April, and at the time of recording this video oil is sitting at around $64 per barrel. Now let's see if we can continue this remarkable 2021 bull run. Okay, so let's take a look at the demand picture first, and it really continues to grow, supportive for oil prices. Now we have the optimism about the global economic recovery from the COVID-19 pandemic with this rollout of the vaccines, and that's really lifting expectations for demand, and this has caused a real surge in commodity prices. Now, the International Energy Agency expects global oil consumption to rise by 5.4 million barrels per day in 2021. Now, they also said that under the current production scenario, that supplies won't be able to rise fast enough to keep up with the pace of this expected demand recovery. So even these short-term increases in production, which we are expecting, aren't likely to stop oil prices surging for the next month or so. Now, the US dollar index, otherwise known as the DXY, this measures the value of the US dollar against a basket of international currencies, and this has slipped back towards that 90 level and has really shrugged off the highest CPI number we had last week. And this is now the DXY's lowest level since February. And as we know, a fall in the value of the US currency makes dollar-denominated commodities more attractive on the international markets, and as with expectations of rising inflation, interest in investing in commodities as a hedge against inflation is rising as well. Now, the only thing we should be cautious of really is the pickup in the Indian variant, which has most recently been found in a couple of places in the UK. Now, Boris Johnson has said that there is no evidence to suggest the UK need to deviate away from their roadmap plan. With this variant supposedly being more transmissible than others, it is important that it does not escalate and put doubt into the reopening of economies across the world in the summer. This would hinder demand prospects, and with production increases along the way, this could cause a fall in oil prices, so keep an eye on that one. Okay, so on the chart now, I'm going to keep it really simple because I am only interested in buying the dips. Now, what I would say first of all is that you can see that we're just struggling to get past this, around this 67 level. At the moment, you can see that we've touched it a few times, and we are moving. We are just really, if I zoom in on this, we are just in this kind of range at the moment, which is fine. We're waiting for some big news as well, and some Fed minutes as well, which could push this market. Now, if I get rid of these drawings, it goes without saying really that if we break this high, then I'm looking for a retest of an order block, which would be left. And then I'm going to be looking higher, and to be honest, towards this 70 level / 75 level is where I'll be targeting next. Now, in the moving averages, you can see that we are trading significantly away from the 200-day moving average, so we are in this clear uptrend, and we've been in this way since October last year really. Now, what I would say is that let's see if we can hold this 50-day moving average for now. You can see that it's actually provided us a nice support even over the last month or so. So we could get another test of this and then a bounce up and breaking of structure to around the 68 level, which is the highs, and 72 and above. Now, I do see oil breaking up past 70 from a fundamental perspective as well. So I am looking for this market to at least reach $70 per barrel as well. Now, if I go onto the 4-hour chart, which is quite interesting reading at the moment, there is actually a nice buying opportunity coming up, which I'm going to be focusing on today. Now, yes, we have created this triple top really, but as you can see from this recent high, you could class this here. Maybe not the cleanest break of structure to the upside, but I think this is a statement of intent that this market does want to go higher. Now, you can see that since then we have fallen back, and the RSI, as you can see, is ticking to the downside as well. Now, I think that if we can get to a level around here, which is actually our order block level, so our OB entry, you can see that from this level we did have this impulse to the upside, and there was this tiny bit of price inefficiency which was left behind from the recent wick that you can see there. So if I just mark that as our FVG, which is our fill value gap, if we can get an entry from this buying opportunity from this order block here, I can see my take profit levels up at around 70. And so if you was going to buy straight from this market, straight from this order block with our stop loss just sitting below, and we were to aim for that 70 level, it's maybe a bit more than that, we're actually looking at around an 8.5 risk reward trade, which is brilliant. And even if you went down onto the 1 hour chart, we might be able to get an even better entry. You can see that this order block, which was the 4 hour order block, now we can actually refine this level a bit more, which would make our entry just slightly better. They move our stop loss up a little bit as well, and now that very same trade is now looking at around a 10.7 R trade. So this is a really key level that I'm going to actually look out for, and I would suggest if you are looking at this level as well, just to set an alert at this level, so it will go off when it hits there, so you don't have to be staring at it all day really. Now if we were to break, the only way I'll be interested in selling this market really is if we were to have price run down and break through. If that was to happen, then, and you were a seller of this market, then my level which I'd be looking to buy from again is actually down at around 61.60 as a sell-in take profit. But as I say, I'm not actually interested in selling this market unless we can break below this level as well. So yeah, for oil, that is what I'm seeing. I wanted to keep it simple today and show this really nice buying opportunity that I'm seeing at the moment. We are, at the time of recording this video, falling into this order block level, and what I would be doing once price was to reach this level is I'd be looking potentially on the 5-minute chart to look for a break of structure to the upside, on the 5 or maybe the 15-minute chart to get a really nice clean entry, as well as having the buy-in straight from the order block. I'll be looking to add the position, as I said, from a break of entry on a lower time frame. So that's it for today, guys. I hope you all enjoyed this video. Very simple buying opportunity here, which you could take advantage of. Please continue to support this channel by liking and subscribing to these videos. We really do appreciate the support, and please drop in any comments. If you have your opinions on oil, that would be great. For me, I like the idea of it reaching $70 per barrel. That's it for today, guys. See you all for the next video, which will be tomorrow. Cheers.